Good morning, YouTube. Simon Dixon here. Good afternoon, good evening, wherever you may be in the world. I wanted to do something when I woke up this morning and I got off from the gym. I wanted to create some content because I've been doing a bit of traveling around right now. I've got lots of really exciting things to be updating you on over the coming days and weeks and months. But I wanted to do what is the best thing that I could do for my channel to serve and give the most value. And I thought it was, let's create a mantra to try and help us remember what we're meant to be doing during Bitcoin crashes. Because the vast majority of people that own Bitcoin, when Bitcoin crashes, will just be a victim of the environment and circumstances that they cannot control. So most people will be panicking. They'll be thinking in terms of fiat. If you watch any of my videos, you'll know the difference between a Bitcoin thinker and a fiat thinker. A fiat thinker is measuring their wealth in terms of what it can buy because they didn't separate their spending money from their investment account, and therefore they see it as not being able to accumulate things that they wanted to buy in fiat, and therefore when Bitcoin crashes, they see it as a depressing time, a bad time, and therefore because they are fiat thinkers. A Bitcoin thinker is somebody that sees a crash as an opportunity to accumulate more Bitcoin because they can take their fiat and they can buy more Bitcoin. A fiat thinker, in summary, is thinking about what they can buy, what fiat they can buy with their Bitcoin. A Bitcoin thinker is thinking what Bitcoin they can buy with their fiat. And fiat is your pounds, your euros, your dollars, whatever it is in the country where the majority of your expenses are. And so the way to get around that, it wasn't the whole video, I'm going to be covering the 3 things that I do during Bitcoin crashes. And I created a little really simple acronym, ABC, so that we can all remember. So when we wake up in the morning and we look at the price and you're driven into, your first reaction is probably to go out there and figure out what's going on, what's the news, what am I missing? And then you're going to be thinking, should I sell? And if you're fiat thinking, your psychology is going to be driving you into wondering, whether you should protect, avoid pain, or move to pleasure and gain some more Bitcoin, or move to buying something with that fiat because of the things you've been planning. What I want to do is not make you a victim of circumstance, of markets, of crashes, and give you a mantra of exactly what I do when Bitcoin's crashing, and so that you can do exactly the same if you choose. So ABC. The first thing to do during a Bitcoin crash is, the first thing I think about doing is accumulate. So I remind myself that when the price of Bitcoin is down, I get to accumulate more Bitcoin because I've trained myself to be a Bitcoin and fiat thinker. Why? Because I've been through all these crashes. I've been through a $30 to $3 crash. I've been through a $1,250 to $250 crash. I've been through a $20,000 to $3,000 crash. And I was fully preparing everybody to go from a $100,000 to a $30,000 crash. We ended up with a $69,000, and I think right now we're around about the $35,000 mark. So accumulation. Now, do I then go along and try and buy the dip and call the bottom and figure out where the top is? No. Why? Because when I used to work before Bitcoin, I used to work in trading, and I know 90% of traders lose money at the expense of the 10% of insiders. And therefore, we don't want to play a game that all of the idiots out there are going to be losing on. And I don't mean idiots in a derogatory way. I mean, they haven't had the life experience that I've had over the last 2 decades working in traditional markets and being in Bitcoin from the beginning and seeing building the biggest community of investors at Bank to the Future that literally invested in all the companies that built our industry, like Coinbase, Kraken, Bitfinex, Bitstamp, and invested in all of them myself as well. So I've seen it all before, and so it just means that they haven't accumulated that experience yet. But hopefully, if you share this video, like this video, then people will subscribe to this channel, and I can just download 20 years of experience and try and give it to you in silly little mantras like ABC so that you can save yourself the path. But learning is only learned by doing. And so when you experience it, it gives it in a different level than when we just academically or share with you. But hopefully I can show you that time. So A, accumulate. I don't try and call the tops. I don't try and call the bottom. I have a very simple mantra. Every single month, I want to have more Bitcoin than I had the previous month. And therefore, I just pick a date and I just buy some Bitcoin on that date, whatever the price is. It's called dollar cost averaging. It's something that absolutely anybody can do. You don't need to study charts. You don't need to give up your job to become a full-time trader. You don't need to go through the stress and emotion of trying to become an insider at the 10% at the expense of the 90%. And you're not at the mercy of market manipulation. You benefit from market manipulation because you're long-term. And it's the great equalizer. Trading is an acquired skill that very few people can succeed at, and investing is something that everyone can do if they implement the simple ABCs. So A is accumulate. I use dollar cost averaging. I ignore the markets. The more Bitcoin crashes, the more Bitcoin you accumulate. Awesome. Now you can be excited about bear markets. As long as you're confident in the long-term fundamentals. What are the long-term fundamentals? If you've watched my channel, I've told you 100 times. Bitcoin is money that you can own and money that you can spend. Unlike a bank, money at a bank is the bank becomes the legal owner of the money, and the bank tells you whether you have permission to spend that money in that way. And therefore, the value, because the third thing is with Bitcoin, there's a fixed supply. So is math and code, and therefore there is a scarcity of Bitcoin. And as the demand for money you can own and money you can buy goes up over time long term, which I believe based upon all the trends, all the economics, all the microeconomics, all the macroeconomics, that the demand for money you can own, money you can spend goes up over time. And fiat currency does the exact opposite. It increases its supply, and therefore there's a larger and larger pool of fiat currency, and therefore the money is designed to go down in value and buy you less goods, so that you have to work more in order to accumulate more. And Bitcoin does the opposite. You end up the long term, if the future equals the past. Not financial advice, not saying that can happen, but I am positioning myself for that to continue happening because it has been happening for 13 years, and I don't see why it's not going to happen for another 13 years. And therefore, Bitcoin is designed in the long term to go up in value, and fiat is designed to go down in value. So if you are a fiat thinker, you're thinking about how to accumulate assets that make you poorer. If you're Bitcoin thinking, then you're thinking about how to accumulate assets that, if the past equals the future, then go up in value, and all of the design has been designed in that way. So accumulate. That's the first thing I do. So the A's is to remember, when Bitcoin's crashing, you get to accumulate more. Do we want Bitcoin to crash? Abso-freaking-lutely we do. What's the second one? Build, B. So there's two ways of building. So when I first got involved in Bitcoin in 2011 by speaking at the first Bitcoin conference and launching the first published book in the world to include Bitcoin, Bank to the Future, Protect Your Future Before Governments Go Bust, we launched a company called banktothefuture.com. The whole purpose of that is that I wanted to build a company that would support the growth of the entire reinvention of the financial markets. And I wanted to be able to invest and give other people opportunities to invest in what entrepreneurs are building to change the financial system. So you can do build in two ways. I do both. Build, you can either build a company or a service or a product that supports the ecosystem if you are risk-minded, more entrepreneurial-minded, or maybe if you're more risk-adverse, then you can become an investor. Or you could do both, and in fact the key is you may want to do both. Building as an entrepreneur means that you have to be willing to take a lot of risk, put a lot on the line, and everything can go wrong, and almost most people do fail. If you're not that kind of risk taker, and this is more of a personality set, there's nothing wrong with one or the other. The worst thing you could do is, if you're not a risk taker, go into business, and then you're highly likely to fail because the risk will really put you in a bad place. Or you can just invest in other people that are building, which means, guess what? The skills of being an investor are the opposite of being a builder. The entrepreneurial skills is taking a bundle of risk and trying to, over time, build something and de-risk it as into a company. An investor is starting with risk management and going for diversification, asset allocation, tax protection, many of the things I talk about on the Retirement Plan B free masterclass, which is still available on retirementplanb.com. So you don't have to build. You can become a business owner just by investing in diversified companies that are all building for you. In fact, I would say the investor side is probably smarter, and everyone that's building should become an investor, because investing just in one company is bad diversification, bad risk management. And so when I built a business that was designed, banktothefuture.com, to support people at investing in the industry in things that other entrepreneurs are building, it was all about diversifying risk away from having everything in the success of one company to having everything in the success of one company and lots of things in the success of other companies by investing in their companies. And so I created a company, banktothefuture.com, that allowed you to buy shares in all the companies. So I've now got shares in over 100 different companies in the industry that went on to build the Bitcoin industry: exchanges, mining platforms, Robinhood, Circle, Bitfinex, building stable coins, companies like exchanges that benefit from all the trends. Anyway, so that is B. So where are we? Let's have a recap. A, B, C. A is accumulate, B is build. Now guess what? During Bitcoin crashes, more gets built. Why? During bull markets, all of the builders are focused on onboarding new clients. It gets crazy, hiring new people, and less time gets focused on innovation. During the bear market, if they played the bull market well, they have excess reserves and they focus on building better technology, building better support systems, building better ways to get ready for the next market. Because if they believe in that we're in a 13-year bull market and these are corrections, if you're anything like me and you run a business, you use these corrections to build systems ready for the next crazy super cycle and phase that has happened every single time that I've been involved in Bitcoin for over a decade now. So that's build. You can build by either building your own product service company, microservice, or you can just invest in companies that are building and diversify widely as an investor. So what is C? C is to cleanse. Cleanse yourself of all the stupid shit that you did during the bull market. Go on, admit it. You bought some stupid things. You bought some things that look very close to scams, and you FOMO'd into some stupid little altcoin or some stupid little thing because you saw the ginormous returns that were coming along in the bull market. Well, it is natural. People do it. They buy all sorts of stupid things in this market. It drives them to gambling, and sometimes it really pays off during bull markets. You know, the stupid things can really go crazy during these hysteria markets, but they crash a lot harder during bear markets. So use it as an opportunity to cleanse. So what I do during bear markets is I take advantage of this concept in economics that we call creative destruction. Which is creative destruction is where all the Ponzi schemes reveal themselves, where markets are crashing, all the stupid things that you bought that really had no purpose in reality start crashing a lot harder than the things that have real utility value and are going to be here for the long term. And the companies that you invested in, they just go bust during these times because they overspent during bull markets, and you have this creative destruction whereby the market forces come in and they weed out the shit. Remember, the game of investing, you expect lots of companies to fail. And that's the game. You don't know which ones are going to succeed, which ones are going to fail. And so you cleanse yourself of all the stuff. What do? Well, I rebalance my portfolio. I decide to get to the percentages that I originally allocated as my goal. Might be one thing I do. And all of those, you know, by rebalancing, you've got all those shit coins that really became a big percentage, and I convert them into the percentages that I originally wanted in terms of what my portfolio should be looking like. So I use it as a cleansing exercise. Use creative destruction, which was a concept created by Schumpeter, where you have companies that are destroyed as a result of not following market trends, and therefore the big winners are created during these bear markets. through this cleansing process, because capital gets allocated to those that have built something genuine, and those that were not on the right track, that were just taking care, that were looking after bull market hysteria, they disappeared. The YouTube influencers that all wanted to sell you affiliate links, that just wanted to get you to trade more, all their users get pissed off, they all get wrecked and they disappear. And all the people that were just pushing affiliate links, doing all the shit to make money short term in this industry, all the Ponzi schemes, all the stupid stuff, all the scams, all the projects that were never going to succeed, they all get creatively destructive. Now, the longer the bear market, the more creative destruction. If we move very swiftly into a bull market, you get less creative destruction, and therefore the shit doesn't reveal itself and the market doesn't evolve. So when Bitcoin is crashing, here's our mantra: ABC, easy as 1, 2, 3. We remind ourselves, ABC. I wake up in the morning, I'm initially FOMO'd, or I'm fudded into thinking, oh, Bitcoin's over, Bitcoin's dead. And you're going to get all those articles right now. Bitcoin is always dead when market's crashing and all the articles come along and everyone said, I told you to do it here. I told you, and you start to feel the emotion. Oh, I should have listened to all those people. I bought the top. I was the last person to buy that Bitcoin. I wish I bought it years ago. All the stupid shit that we say to ourselves that's designed at driving you from Bitcoin thinking into fiat thinking. And the more people that are fiat thinkers, the more the market goes down, and the more you get to accumulate more Bitcoin. And therefore, if the long-term trend prevails, the wealthier you get to be, because you're an ABC. So what are you going to do during a bear market? You're going to accumulate, and you're going to accumulate some more Bitcoin. So that's great. You want the market to go down. You're going to build, because you're either working on your own product and you're going to invest the time, or you're going to be investing in other people's building. And you're going to cleanse, you're going to get rid of the crap, you're going to rebalance, you're going to let creative destruction take care of it yourself. So wake up in the morning, the price is crashing, ABC, ABC, ABC. And you've set some simple rules, and you can even take all the emotion. And if you want to take all the emotion out of it and have a mechanical approach, which by the way is the key to the success of the most successful investors in all time, then you can always check out and immerse yourself in the 15 hours of free content I created for those that really want to take this to the next level at retirementplanb.com. Okay, all right, this is longer than I thought it was going to be. I hope you enjoyed it. I haven't gone live for a few days. I've got a bit of a travel plan coming up with some things that I'm going to be updating you on and making sure that you're updated as we go through. Enjoy your ABCs. Always remember, you are alive at one of the most interesting and exciting times in financial history. If you subscribe to this channel, if you share my content, if you like it, tweet it, hit that subscribe button, hit the bell symbol, hit all. I will make sure that you are on the right side of that change, because some are going to get hurt, some are going to do really well, and I want you to be on the right side of that change. We're going to do it with peace, love, unity. We're transforming the financial system, and I want you to be there with us. Peace.